Well, welcome back. Now, in this episode, I'm going to answer your question, is Oregon a tax lien state? And I'm going to go through the details of that, and you're going to find out that Oregon is not a tax lien state. It's actually a tax deed state. So my name is Ted Thomas, and I've been involved in tax lien certificates and also tax deed properties for the past 30 years. Now, I started out buying single-family homes and renting those to other people. That grew into working with investors and buying 50 units, 150, all the way up to 300 units. We even did some office buildings. But about 30 years ago, I discovered tax lien certificates and tax defaulted property. You call them tax liens and tax deeds. And I'm going to explain that today so that you completely understand it. And I'll show you how to make money. You're going to like this business. There's a lot of surprises, but there's a chance to make a bunch of dough. All right, now the students who have very little money, don't worry about that because I'm going to show you how to get started, make your first deal without a lot of money. If you're an eager investor and you want a secure investment where you're going to like tax liens, you'll also like tax deeds, although they're a little bit more entrepreneurial than tax lien certificates. Okay, so today's episode is all about, is Oregon a tax lien state? So I'm here to tell you that Oregon is not a tax lien state, and I'm going to share a lot of information. Now, when I finish, you'll have knowledge on how to make money in this environment and not make mistakes. I'll be right back. Is Oregon a tax lien state? Well, you don't know what you don't know. Tax lien and tax deed business is just full of surprises. Now, the surprises are usually beneficial to us as investors. But keep in mind, there's a lot of information you don't know, and you're going to get a lot of surprises. So kind of keep your mind open. All right, now I'm going to show you some examples. Now, over the past 20 years, when I've been involved in these tax lien certificates, I've learned some funny things. So I started out a few years ago in California. Now, California is a tax deed state, as is Oregon. It's a tax deed state. So I decided I'd kind of broaden my view out and start looking at some of the counties in the state of Oregon. And boy, did I get some surprises. Oregon was really different than California. And what do they do in Oregon? Well, first of all, if you don't pay your taxes, Oregon's going to do something about it. So the legislature, well, they get onto things like that. So what the legislature has done is they've created laws. And the laws, once they create them, they put them in big statute books. They call them the statutes, but they're basically the law of the state. And they take those laws and they pass them down to the county, and they tell the county board of supervisors or the board of commissioners that they have to follow those laws. So that means a treasurer, tax collector, and those people are going to enforce those laws at the county level. All right, so I'm in California, and people in California are starting to say at that time, wait a minute, our taxes are too high. Why don't we start thinking about moving to Oregon where the taxes were less? So I said, well, why don't I learn about Oregon and see if they have properties that are coming up for tax defaulted auctions. Well, sure enough, there was tax deeds in the state of Oregon. All right, now it seemed normal to look there because it was just an extension of California. But I found out really quickly that Oregon had all different rules than California. So in Oregon, if the property owner does not pay the tax, the board of supervisors, the treasurer, will send out default notices. And that default notice is going to tell the property owner the consequences, and the property owner is going to lose the property if they don't pay their taxes. So it's swift, and it happens relatively quickly, but they give them enough time to pay their taxes. If you don't pay taxes in any state, you're basically going to forfeit the property. And guess what? That county is going to not pick the property up, but they're going to pick up all the title to that property because they're going to take it away from you. Now, you can't pick a property up, of course, but what they're going to do is they're going to take possession of that property. They're going to seize the property. Well, I found out that they were going to do that in Oregon, too. So a short time later, I started getting into the details of what was going to happen in Oregon. Well, sure enough, auctions were taking place in all of the counties. Usually they have an annual auction. Now, Oregon doesn't have a lot of counties, so you could easily check on all the counties, but you'll find out that they have the auctions. Now, when they have an auction, they don't want the property. They want to put it back into the marketplace. So what the treasurer will do is they'll confiscate, they'll seize the property. Then what they'll do is they'll put it out for sale again. So they want to take it off the list of defaulted property taxes where they're not getting any money, and they want to get it back on the tax roll so they can collect money to pay the police, the fire departments, and things like that. Now, they're going to put this property back out for auction, they put it out at a low price, basically very close to the back taxes and maybe some attorney's fees or some small fees they'll add to that. But the property's probably going to sell for a 60 or 70, 80% discounts are not unusual at these auctions. But what happens if nobody buys it? Well, it turns out in Oregon at that time, people weren't buying the property. Now, why they weren't buying the property, I don't know. They probably just didn't have money. So I kept watching the auction. I kept finding out more and more properties. Nobody was bidding on the property. All right, now here's what's happening. There's an auction taking place. When the auction takes place, they're going to take the property and seize it. They're going to put it out in the marketplace at a very low price, maybe 10 cents, 5, 10, 20 cents on the dollar with no mortgage, and nobody's buying the property. So Oregon came up with a rule. I don't believe they came up with this rule. They've since changed it, but they came up with a rule that said, if you'll buy one of these properties, we will lend you the money to buy it. And I talk about utopia. Here you're going to get properties for 5 and 10 cents on the dollar, and the government's going to give you the money to get it. Now that's the best socialism I ever heard of in my life. How could you buy a property for 5 or 10 cents on the dollar, no mortgage, and now the county was going to lend the money? I was in absolute shock when I heard about that. So the county would lend 100% of the taxes. In other words, if they were going to buy the property, if you're going to buy it for 5 or 10 cents on the dollar, they would give you 100% of that money, and then you could pay it back over a period of time. So was that a great deal or what? So I never heard of a county becoming the lender, but they did that in the state of Oregon for a while. Now, I know that sounds too good to be true. I actually wrote a newsletter in those days, and I wrote about it. People didn't even believe it when I wrote it in the newsletter. All right, so everything I'm going to talk about when I talk about tax liens and deeds is 200 years old. What we're covering on this episode is one thing only. Is Oregon a tax lien state? No, it's not a tax lien state. The answer is no, it's a tax deed state. So Oregon does not sell tax liens. They're actually going to sell the property. So that means if you go to the auction, the state has already determined how they're going to do things. All right, the legislature for the state makes the rules. They put the rules in books. They call those books the statutes, okay, the rules for the state. Anybody can read those. You can find them online. You can find them at the library. But the Board of Supervisors of your county or the county commissioners has to follow those rules. Now, folks, I'm not an attorney. I'm certainly not a real estate broker. I'm not an accountant. I'm not a business advisor. All I am is an author, a publisher, and a prepared investor at these auctions. So I'll take a couple of seconds and tell you a little bit more about the auction, but you've got to know that when you go to auction in the state of Oregon, you're not buying a tax lien certificate, you're actually buying a tax deed. Now, all property owners must pay property tax. If they don't pay the property tax, the county will take action. They'll issue a notice of default. The notice of default will explain the consequences to the owner, and the owner will lose the property. If you don't pay your property tax, you forfeit the property. That's right, you forfeit it back to the county. I didn't make that rule. The legislature makes the rule. They pass it down to the county commissioners. Then the county commissioners has the treasurer, number one, levy the tax. Now, when they finish levying the tax, then they're going to try to collect that tax. And then if they can't collect it, they're going to seize the property. So understand, all property will have a property tax. Doesn't matter whether big or small. If it's privately owned property, it has a property tax. All right, if they can't collect it, the state's going to take the property. The state is the county. So the auctions could be at the county offices, or they could be on the courthouse steps. They'll be announced in the newspaper. Anybody can go to the auction. Anybody can bid. They'll also be on the county website. So there's plenty of notice of these auctions. These properties are going to sell 5, 10, 20 cents on the dollar. It's not unusual to get a 60, 70, 80% discount on a property at a tax defaulted auction. All right, so the starting bid is usually right in the area of the back taxes, plus maybe some small attorney fees or county fees on it. But generally speaking, they're going to sell these properties starting bid 5 and 10 cents on the dollar. All right, now if you're a person that's just getting started, you can do this. Hundreds of people before you are doing exactly what I'm talking about. Nationwide, there's over 5,000 tax defaulted auctions. Over 5,000 auctions every year. So dozens of properties available. Now, if your county has a lot of people, then they're going to have hundreds. But if it's only got a few people, they're going to have a dozen or so of these properties. But every county, all 3,000 counties across the United States will have it. There's going to be hundreds of properties. All right, they're going to be sold on vacant land, residential land, farms. They're going to sell office buildings. Everything that could have a tax will come up for auction at the sale. Now, the auctions are usually about once a year. And the reason you're buying that property is the county seized the property. The county has confiscated it. They're like we saw the tow truck. Now they own that property. What do they want with that property? They don't want a property. They're going to have parks and schools and whatever. They don't want that property. So they're going to put it back in the market. They put it back in the market at a low price, 5, 10, 20 cents on the dollar. Why? Because they need money. They've got to pay the police. They've got to pay the school teachers. They got lots of bills to pay. You can do this because you're going to be able to buy at rock bottom dollar. Is every deal going to be a great one? No. If there's other bidders there and they don't know what they're doing, they're going to spend too much money. Okay. So as I said, 3,000 counties, and there's another 1,400 municipalities. So all of those are going to have auctions. You just have to learn how to do that. There's going to be plenty for everybody. I say this again and again. It's a business of abundance. There's a lot of property available. Business of abundance. There's always going to be too much. I've been teaching this for 30 years. I've never seen them run out. All right, so if you want to have a business, well, Uncle Sam wants you to have a business. Why not think about doing this one? You could buy properties and resell them. So buy it low, sell it low, make some money, move on and do another one. You'll never run out of inventory. All right, who does this? Savvy investors. They get themselves trained. They do this all the time. Now, you're going to have to learn how to research and do that online. We have classes you can do that. Okay, every one of these properties has to be looked at. Someone has to look at it. You do not want to buy a property that you haven't looked at. Why? You need boots on the ground. Someone's going to tell me they saw a picture. Well, how old was the picture? Who made the picture? Well, you want to make sure that you've had boots on the ground. You wouldn't marry the woman without seeing her. So don't get a property without seeing it. Okay, so in this episode, I'm reminding you of a couple of things. One, Oregon is not a tax lien state. It's a tax deed state. Number two, the federal government, the state government, and the county government change the rules all the time. You have to adapt to those rules. If you don't learn the rules, you're going to be in trouble. Now, the Board of Supervisors and the state make most of the rules that you need to be involved in. All right, for example, in Los Angeles, if you want to go to the auction, the Board of Supervisors will tell you you must buy a ticket to get a bidder sign to hold up, a bidder's number, I should say, and you're going to have to put down $5,000, which they'll give you back if you don't get anything. However, you got to put up $5,000. I'm talking about Oregon today. I'm absolutely shocked. In Portland, Oregon, if you want to go to the auction, you're going to get a big surprise. The last record I looked at, they want a $25,000 deposit. Now that's going to eliminate a lot of people right away. So if you think about that and you've got money, you're probably not going to find anybody at the auction that doesn't, because $25,000 is certainly going to restrict a lot of people from buying at those auctions. So in Portland, Oregon, you're going to have to pay up to $25,000 deposit before you end up at the auction. All right, so I'm getting ready to button it up right now. You guys know where Oregon is, so keep in the back of your mind, it's not a tax lien state, it's a tax deed state. That means they're going to sell you the property. You don't want to buy any property that you haven't had your boots on the ground. Let me make sure that you don't make that mistake. Here's what you need to understand. You're going to see a video in a second that's really going to make this, you'll understand it firmly. First of all, if you buy a property that you haven't seen, you're going to own it because you're going to give them your money. They're not going to give it back. If you haven't seen it, what if there was a fire? What if it was next to a pig farm or a chicken farm? What if if there was a hurricane on the East Coast? Or what if there's a huge windstorm and a flood on the West Coast? It could be anything that could happen. So you don't want to buy a property that you haven't seen. Second big mistake people make at the auction, and that is they start bidding and they try to win the auction. You're not trying to win, you're trying to get a good deal. So the way you prevent yourself from bidding too high is you establish an exit strategy. In other words, not exit from the auction, exit selling the property. If you know what you're going to sell it for, you won't bid too high. Now, my name is Ted Thomas. I want you to go right below me, and there's a free gift. I'll see you in the next episode.